Hi guys, welcome back to my channel. This is the market analysis for 2nd February 2023. Let's get to it. On silver, we can see here on the weekly that price has finally started pushing higher to go and fill this bit of imbalance that was left here. Just a tiny bit, but there's a high probability it will be filled. You can see it also coincides with January's high, which shows that there are orders resting above there. What you can see here, the previous week took out this previous week's low, and got adequate volume to push up. So right now it's pushing up. And then, since you can see this is January's highs and lows, last month was mostly consolidating. Now we expect price to rally. You can also see this imbalance at the top here, but it's on the daily time frame, but I still marked it out, which is near this 25.2 level of supply and demand. So that's where I see price heading to, because on the weekly it's been in this small ring. Okay, it's more evident on the daily, but in this area you can see that it's not really going outside. It came closed back in, so it has collected orders and now expect it to move. Go to the daily, where I was saying you can see this consolidation clearer here. You can notice the bodies of the candlesticks, not the wicks. The bodies are always ranging in here in this area. So price traded below here to take out orders to the downside, and then has now pushed up past the $24 level of supply and demand. And also we can see here that this is a 4-hour level of supply and demand, and price was unable to close below here for the longest. So right now I'm expecting price to continue with its bullish move. Let's go to the 4-hour, where we can see that this buy side liquidity was cleared yesterday. Price retraced into this level of supply and demand and then shot up. Yesterday was a tricky trading day because of the news release, so it's best to not be in the charts based on my strategy, because the market whipsaws back and forth. To those who trade during markets, salute to you. During news, I mean. So on this time frame, you can see that price pushed up, left an imbalance here, and we can see there are several levels of buy side liquidity. There's this one, these are equal highs. All of these are equal highs here. No, they're all equal to this. It's just that this is the highest one, but all these are buy side liquidity. You can see this one was cleared, so we can clear it. So on the 4-hour, structure is still bearish, but in a consolidation, structure is messy. So if we go to the hourly, that's when at least you can see changes in structure. Structure changed from this point to this point to this point here, because this area broke structure. So it retraced, took out these lows here, took out liquidity, then had a push up, had a rally up after it took out this sell side liquidity here. Took this sell side liquidity, had a rally up. Right now it's almost breaking structure to the upside, and we can see this coincides with this buy side liquidity. So what I'd expect right now is, since this leg has already retraced, we move to the next one, which would be from here to here. that means that price has to fill at least halfway of the imbalance before it continues with its move up. You can see that also coincides with this 15-minute structure. This 38% level coincides with the lower time frame structure, and this is the midpoint of the imbalance of the 4 hour. So let's go to the 15. On the 15, now we can see structure here on this time frame. It's here, here, and here. So if we draw our fibs on this time frame, we can see that this lower portion of the imbalance coincides with the fib levels. So this is the one we're going to use. So this is the area we're looking to enter in. Where I'd look to enter is below this level of supply and demand, because we can see here that these lows which are just liquidity and then this imbalance because of this rally. So I'd wait for price to retrace to here. Then I take my trades up to at least 24.4, but the overall targets are here, 24.7, which have been my targets for such a long time. Then, since you're literally here from $22, this was the target. So if it's reached, the next target is 25.2. That's what I see in silver. So guys, if you want to become a funded trader with FTMO, get an awesome discount, and the links in the description. On gold, we start on the weekly. We can see that price has finally been able to trade above this 1915 level of supply and demand, and is pushing up. We're expected to fill this imbalance. This is the weekly targets, which is above this buy side liquidity here. I expect price to fill imbalance at least halfway, so it's 1965. Our 1960 targets have already been reached with this push up. Now, okay, 1970, that would be a good target because it also coincides with this weekly body open and closes. And go to the daily, you can see that yes, it came, took out this outside liquidity, had an expansion to the upside because of this doji candlesticks. It filled. Okay, let's move the daily level, and as you can see here on this time frame, price has broken structure to the upside, so expect a continuation of that. This imbalance is filled here, so we take it out, and this buy side liquidity was taken. Okay, so you can see yesterday price retraced, filled this imbalance fully, and then had a sharp move to the upside as predicted in yesterday's analysis. Let's move the structure points. On the daily, structure is now bullish. This is the higher high. This is the previous higher high. This is the current higher low here. So this is the 4-hour structure. In the 4-hour, you can see that there's a lot of imbalance. This area price has moved exponentially without retracing. So that's the imbalance here. Draw fibs, the far, see where we expect price to retrace to. So you can see that in order for price to come to one of these fib levels, it will have to have filled this imbalance and trade to this previous bearish candlestick, the last bearish candlestick that price printed. This big push up was because of the news release yesterday. So on this time frame, this is where I'd see price retracing to before it trades higher to reach 1970. let's go to the hourly, and see that the hourly structure, where was it? The hourly structure is broken to the downside, but next has been broken again to the upside. So even if I draw the fibs, they'll just look the same. Go to the 15. This structure is different because there's a change of character at this point. Here, because it went from bearish to bullish at that point. So price came up, retraced, traded higher, traded lower, then traded higher. So these are the structure points: the previous high, current high low, and the current high. See, price has traded above January's high, which is an area where there is a lot of orders and volume. So let's draw our fibs on this time frame. In order for the price to reach one of these fib levels, it has to have covered at least half of the imbalance. On the far, we have seen that it would have to have covered all of it. You can see the 61% coincides with the previous structure high and coincides with the imbalance being filled. So I am more inclined to wait for price to reach at least 50% of this imbalance. Why? Because the 61 would be perfect because it coincides with the previous structure and the imbalance being filled. But the issue is, when price trades with such volume, the probability of it retracing that deeply is not very high. So at least to the midpoint. And this 50%, which you can see coincides with the last bearish candlestick on this, in this range here, on this 15-minute time frame. So that's where I'd expect market to retrace to before we continue buying it and taking it to the upside. If you like the content, like, share, subscribe, stay tuned, and watch the markets with me. Peace.